What's going on, everybody? It's another week of What the F happened. You notice how I enunciated the F? Because there is a lot of what the F happening out there in the markets. I mean, have you been following what's going on? You know, we had several weeks, almost, I think it was actually over a month, that the markets were hemorrhaging. They were capitulating. They were just going down, down, down. People were saying, oh my God, I'm down 20%. I'm down 30%. Oh, but then one day it bounces up 800 points and it's all good, right? It's all good. And then the next day we had another good day. Oh, we're good. Whew. Glad we bounced off the bottom. We're going to the moon again. Folks, don't buy into that lie. This is just bottom feeding. Like, you look at the big dogs, the big hedge funds, Kathy and all those guys, guys and gals, they just bought the bounce. They took positions when they were low, but they're not low for you. They're low because these professionals, these institutions know how to trade this. Oh, also in the news, and Mr. Snaggy's really going to hit on this, I guess Elon's buying Twitter again. Who knew? Twitter, I guess it's a good investment. And one hedge fund made a bunch of money. But you know what? There's so much we're going to unpack. So thanks for joining us. Instagram, TikTok, YouTube, and Facebook. We'll be right back. All right, we're back at it. So here we go. I'm joined by my partner in crime. He's been holding the weight up as I get ready for this TEDx talk, which I do this Saturday out in New York City, actually Long Island. But it's been a huge weight, been traveling all over the world, speaking about Private Money Club and our launch coming up in a little under 10 days. I think we're at 9 days today. So we got a lot going on in the house. But Snaggy, what's happening on your end out there in Florida?
Hey, everything's good. I mean, the west coast of Florida, we were live last week when the hurricane was kind of just come through and everything was a mess and a lot of damage and destruction over in Florida and over especially on the west coast of Florida and the Sanibel, Fort Myers Beach is destroyed. Just wild to see the images and the videos. So if anyone's watching right now, hopefully you're doing all right. We've been sending a bunch of care packages over. All my friends and associates around the area are just loading people up, sending stuff over, financial donations, and doing everything we can to help them out over there. And so prayers and with them. And with that said, it's just been wild this week to watch the attacks on Governor DeSantis. He's done such a fantastic job down here that the mainstream media, the legacy media, the Democrats, they just are attacking him. And it's wild to see it happen in real time because what they're saying in the news and all this stuff is just couldn't be further from the truth. And it just drives that stake into the fact that so much of the stuff that we see on the news is just fake news. It's whatever their agenda is and the propaganda that they're pushing out. And so we're going to unpack some of that today because it does directly affect your money. Because if you're being told one thing and something else is happening, well, wouldn't you rather know what's actually going on? So we're going to unpack some of that today as well.
Yeah, man, it's a sad state of affairs over there. If any of you are from Florida on Instagram, TikTok, YouTube, Facebook, our prayers are with you and your families. I know, our business partner, Brent, had some major losses, over in Captiva boats and rentals and things. And, that's nothing when it's compared to people losing everything, animals dying and, family members, still missing. And it's a tragic event. But I would agree with what Snaggy said here. I feel from what I've seen, and which has been limited from planes and hotel rooms, but I feel like DeSantis has really been on top of it, trying to get all the other states to help, and then really, really putting his best foot forward. I mean, what do you do when, a hurricane slams into the coast of the state that you're the governor? You just rise to the occasion. You lead, and that's what he does. And it's not about, blue or red. It's not about Democrat or Republican. It's about humans. It's about people. It's about caring. That's all this is about. But the media and the politicians just want to just make it about a side. They want to divide. And it's sick. And I got some sad news. Like every other time an empire has fallen, this is exactly what happens. Watch Ray Dalio's video about empires and what happens. This is what happens, folks. There's massive divide. There's weakening of the currency or whatever the means of exchange is in that particular empire. You're seeing this happen right here. And it's sad. Like, instead of caring about the people and their homes and their families and helping them, listen, like I just saw an article today. There's a bunch of property insurance companies that are now insolvent. Done, gone, no money. So, I mean, one of two things has to happen. The Fed, the government, or some of their government agencies that has money for these disasters has to step in and bail them out and make sure that people's insurance policies are paid out on. That's a big thing. And I know, some of the mutually owned life insurance companies that Stephen and I work with for designing the infinite banking policies that we do, they've been donating huge amounts of money from their foundations to Florida and its residents. And, I think we just all need to band together. This is a pretty tragic event. We all know hurricanes and what they do, but this one was bad, folks. And it hit some very populated areas, and people are suffering major catastrophic losses. Like, put yourself in their shoes. Take yourself out of this political bullshit and put yourself in the people's minds and in their hearts. That's what matters. So anyway, just make sure you say
just on that. When I see articles from the New York Times that say like Florida leaders rejected major climate laws, now they're seeking storm aid. Like, no shit. Just stuff like this just pisses me off so bad from supposedly one of the, top newspapers in this country. Like, that is political bullshit right there. And that's not even an opinion article. Like, this is just an article from the New York Times. So if somebody doesn't agree with your crazy green energy climate laws that's destroying California and so many other European nations right now all of a sudden when a hurricane hits, DeSantis and Florida's the bad guys. Like, oh, all right, I'm going to let it go, Chris, but I could go on for days about this. It's just so,
you have
so
to.
crazy.
And, as always, we got TikTok coming in nice, hot and heavy. We got Carl Williamson coming in saying DeSantis is a piece of shit. Maybe he'd have some help if he didn't ship them up to Mass. I think he's talking about, shipping the illegals up to, I don't know what he's talking about, up to Massachusetts. Again, another idiot on TikTok wanting to care about politics and not care about the real problem, and that is the losses that these people are facing. It's not about a governor. It's not about the people in power. It's about the people and what they're going through. So, hey, I got word for you, Carl Williamson. A big this to you, because it's not about what you're trying to make it about. So why don't you just go over and do what you do best, and that is hate, hate, and hate. There's no room for hate right now in this world. There's too many problems that we all can band together and solve. That's right. Anyway, with that being going,
yeah, let's talk a little bit about the economy and what's going on.
Yeah, let's get back to the money side of things. But I mean, that is top news. So we definitely wanted to make sure we got that one out of the way. And all of you should follow Carl Williamson and let him know what you think about his piece of shit comment. Way to go, buddy. Way to go.
Here's a good little meme I saw earlier that just kind of, this is where the world we live in today. So what I thought $1 million would get me as a kid versus reality. So it's this big mansion, and then the bottom image is this little like 1,200 square foot house for $950,000 on Zillow. So it's like, man, how did we get here, Chris?
Steven, that is so cool. Like, think about that. Like, I'm 45. Steven, how old are you now?
I'll be 40 in a couple months.
You'll be 40, so you're 39. Like, the simple fact that like we can look at this photo and not even need to question that and be like, yep. When we were growing up, $1 million was so much money, almost an unfathomable. I'm not saying that word right, but you get what I'm saying. Amount of money, and you could buy this giant mansion for $1 million today. Well, depending on where in the country you're at, I mean, that's what you get, about a 1,200 square foot house. I mean, here in Buffalo, you can get a little bit more, but still nothing like what that photo was. It's funny how the times are a-changing. If any of you know Bob Dylan, he's got that song, The Times Are A-Changing, and it will never stop. The times are always going to continue to change. We're going to have good times and we're going to have bad times. And unfortunately, folks, with what's happening right now with the Fed, with the political environment, with everything that's going on, Europe, I mean, come on, folks, put your prayers to Europe too, because they're going to be entering winter. This is the winter season. It's pretty freaking cold in Germany and almost all European areas and nations and towns and villages and cities. It's cold. and they are not going to have heat. There's companies closing their doors because of what's going on and how Russia's blocking gas over there. But a lot of this comes down to the times are changing. We need to start relying on ourselves. Instead of relying on everybody else to solve our problems, we got to come back. And a lot can be seen from that. And what you're seeing with the citizens over there in Europe is they are doing that. They're banding together. They're getting ready. They're preparing. They're cutting wood. They're modifying their homes so that they're not reliant on gas, which is out of their control. They're relying on themselves. And I think there's a lesson in there, folks. I really do. And that lesson also should lead over to what you're seeing in the markets today. I know everybody got excited, yesterday and Tuesday. Or I'm sorry, yesterday and Monday. So Monday and Tuesday of this week. My gosh, I need more coffee. They got excited because the market bounced. Monday, when the market went up 800 and some points, I'm like, whoa. But I knew what was going on. It's institutions bottom feeding. You know why I knew that was what was going on? Because I studied history. History shows that this always happens. Look at this right there. Steven's got a chart up here of the Dow Jones, and you can see it. It just bounced. But why did it bounce? It's not because all of you are putting more money in your 401ks or you're moving money off the sidelines back into the market, which I hope that you're on the sidelines. It's because institutions came in and bought massive, massive chunks of these specific stocks that move the market up. Institutions can move the markets. We cannot. Okay. I know that Reddit push, for a single stock like GameStop and Stop and AMC, like you saw them do some damage. And that was like one of the first times in my entire professional career where I've seen something like that happen. But I just want you to know, this is a trap, folks. The markets aren't going to go up. The Fed has already told you what they're going to do. They're going to be diligent, and there's going to be some pain that we're going to feel. That pain means they're going to destroy the stock market. What you saw in a 2-day move, it's already down today. Futures were down over 200 today. Okay? That was a minor little glimpse, and it's not a glimpse of hope. It's just a glimpse into the world of how institutions make money and you don't. So in the market world, I'm going to give you some facts. There's always a winner and there's always a loser. And you know who the loser usually is? Us. You and I. Because we can't play against the big dogs. We can't play against the institutions, the hedge funds. They got us beat. So if you're trying to beat the system, if you're trying to play with the big guys, you're going to lose every time. And they're going to make. Because it's a different game they're playing, folks. So please be safe. Be careful with your funds. Lazy Cash here, he even says it. He says, be lazy with your money right now, but move it, but keep it out of the markets. Even a cat knows these things. It's funny. All right, what do we got going on here, Steven?
Yeah, I just saw a user comment said bad news coming from Kyle on YouTube. His kid totaled their car. Good news is he was able to use his specially designed whole life banking policy to purchase a new car, and now he's going to be able to recapture all that money. So just kind of cool to see somebody on that's actually practicing what we preach every single day, Chris.
Yeah. And Sugar Danny 01 on TikTok came in and said, too much uncertainty, down we go. And he's right. He's talking about sentiment, investor sentiment. When there's uncertainty, which there's lots of uncertainty right now, you got Europe, you got rising prices, you got inflation running hot, you've got the Fed all out waging war against the markets. And you might say it's something different, but they're waging war to bring inflation back down. And they created the inflation by massive amounts of printing money, which was somewhat needed, but not to the tune that they did it. They drove inflation up to where it was. And now they're having a hard time getting a handle on it. They're having a hard time. They're even going to the central banks and saying, hey, listen, we're going to have to control lending. Have any of you tried getting a loan lately? It's not as easy as it was a year ago. It's not as easy as it was 2 years ago. They're really, really putting the brakes on. And folks, it's going to hurt us. But it's going to hurt us because it's going to bring the stock market down. You're going to see trillions wiped off of Dow Jones, we'll call it Wall Street right now, but the index, everybody, I just had somebody, it was a hater, of course, on TikTok, comment on one of my posts saying, that's the dumbest idea. He was talking about, the specially designed whole life. So it was a post on that. So that's the stupidest thing I've ever heard of. You should just be putting your money in the index. That's stupid. You know what? I want to swear, but that stupid idiot doesn't even know what an index is. Doesn't even know what he's doing. So I commented back. I said, yeah, how's that working out for you and everybody else right now? You're down what, 20, 23, 26%, depending on where you bought. Yeah, that's working out really good, right? It just, people have no logic. People are investing strictly on emotion right now. Investor sentiment, like the TikTok user said, and that's a sick, scary thing, folks. We need to start basing our investment decisions, our financial decisions on logic and less on emotion. And if we just focused on logic, the rose-colored glasses would come off and you'd be able to make decisions based on pure logic instead. You'd avoid a ton. You'd avoid a ton of the pitfalls that come along with emotional-based decision making. But people are so caught in their ways because we've had such good times for so long. Perfect thing right there. It's an airplane. So for TikTok and Instagram, it's a picture of an airplane and all the wheels fell off. And it says, that's not good. Recession runway. So they're just saying there's a runway there. You know, it's kind of funny, Stephen. One thing I always think about, and I've been thinking about this a lot lately, you know, in life, we're always going to be thrown hooks. We're going to be thrown hard times. And it's, you know, I think Steve Harvey said, you know, this about it. It's not 90% about how we handle the situations that are thrown at us, 10% about the situation and 90% about how we actually handle it. Emotions get us into trouble. Emotions are the reason why the majority of the people out there that invest are buying high and now probably right now selling low. It's because they didn't do something that logically makes a ton of sense. And that is buy low, sell high, and you don't lose money. But if you do the opposite, you use emotion, you buy high because that's when it feels good to buy. You sell low and you always lose money. So simple. What is this?
That's a great example of what happens when you just kind of let other people control everything. You know, you end up not being able to retire. This is an article that came out of the Times this week. Retired will return to work after pensions fail to match price rises. Hundreds of thousands of retired people are considering returning to work because the rising cost of living has derailed their plans, new research suggests. Now, this is over in the UK, but we can see what's happening there, and we can see what's coming this, you know, over the ocean as well.
Yeah.
More than a third of retired workers questioned said they were concerned that they were not able to sustain the lifestyle that they wanted in retirement.
I think that's another thing, you know, and this isn't anyone's fault. It's really just the times. And, you know, there's lots of books. Hard Times Create Strong Men by Stephen Arnio, the late Stephen Arnio. That's a great book. But we've been in good times for a long time. It's the longest bull run history we've had, or at least it was, because we're not in a bull run anymore. And because of that, people have really forgotten the negative side of the markets. It's just invest. This is why all you ever hear anymore is index, invest in the index, put money in this, put money in that, invest. It's because most people haven't seen any bad times. If you're 38 years old or younger, I'm looking at TikTok here, 38 years old or younger, you've never felt the impacts of a recession. Maybe your family's gone through a recession, but you've never independently felt the real effects of a recession, but you're going to. So welcome to the rest of us. You're about to see what a recession means.
I don't know, Jim Cramer, this was 2 days ago. The research is so bearish today as the analysts don't fear saying negatives. I would be more circumspect on the negative side. We are the most long in ages for the trust. Join the investing club, Chris.
Oh yeah. Thanks, Jim. Yep, I'll be joining your investing club. Yeah, because I want to take your investment advice. You have the worst track history of any person in Wall Street, I think, ever. And I might be far-fetched saying that, but literally, like, does anyone have a worse track history than Jim Cramer? Just asking for a friend. Does anyone know anyone that has a worse track history? Does the guy ever get anything right? I mean, anyway, get off of that. Let's move on to something more fun. You know, back a while ago on this show, we talked a lot about Elon Musk, and we talked a lot about Twitter. And we all know, like, you know, he took a major stake in it, and then he said he was going to buy it and he forgave his board seats so that he then could buy it. But then they did their research and they found there was too many bots and blah, 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 blah. $44 billion purchase. Stephen, what the heck is going on in Bloomberg news today?
Yeah, so there's been a big lawsuit going on, or, you know, the preliminaries for a lawsuit with some interviews happening and stuff like that, leading up to what was going to be a trial to basically force Elon Musk to purchase Twitter. Because if we go back to, like you were saying, Chris, Elon came in and said he was going to buy it and then backed out. And then Twitter came in and said, all right, well, we're going to force you to buy it. And Elon said, well, good luck with that. And so now we come out this week, actually just yesterday, Musk says he's moving forward with the purchase now. So Musk revives the $44 billion Twitter bid, aiming to avoid trial. Legal team for Musk sensed judge would not rule in favor. Now, this is coming from Bloomberg, so, you know, one source, but proposal likely eliminates need for court trial this month. and just talks a little bit about the deal. So the original share price of 54.20. So yesterday, I think Twitter was trading around in like the 30s, I believe.
Yeah, I was in the 30s range.
I guess in the 40s, the lower 40s for the recent past. And so yesterday when he announced he's buying it again, at $54 a share, the stock just shot up. Because if you own it at 44 and he buys it at 54, well, you automatically have that equity, right? So people went in and swooped it up. They actually halted trading for, I think, most of the day. It looks like it's resumed now, maybe, but they halted trading because of that. And so all the details are coming out today, but we'll see what happens with it. It looks like Musk is moving forward with the purchase.
And I got to ask myself, when you hear something like that, is that because he's trying to avoid the legal battle that ensues him? Or, I mean, he's got enough money. He could fight that thing till the day he dies and never even have it blip his radar. But, maybe he doesn't want the bad press. Maybe there's a lot of factors into that. Does he really want to own Twitter? Is there more to Elon's not a dumb guy. Okay. So there's a secondary reason, it's not, he doesn't want to just own Twitter because of a profit part. There's something more he's trying to do. Is it that he's really trying to protect, the freedom of speech? Is he really trying to make a stand with social media sites and truth? I don't know. I mean, there's a lot to be said about that and a lot of opinions. And I don't have a very knowledgeable one because I haven't really dug into it. I was surprised to see that. And the first thing to my mind, logical thinking, was I don't think he wants to fight the legal fight. There's something in there that he doesn't want to fight that we'll never know about. But that's the first thing that comes to my mind. I'd like all of your opinions on that. What do you think is the reason for Elon buying Twitter? I'll ask, somebody just said Elon for president, but Instagram and TikTok and YouTube and Facebook, what is your thought as to why Elon is changing his tune and now wanting to buy it again at a very premium price based on where the share prices are today? I'd love your opinion on that.
Very premium price, especially when his claim that there's a lot of bots and stuff on the platform. Something interesting that happened yesterday was a lot of bigger accounts, blue check type people on Twitter were saying that they were losing thousands and thousands of followers directly following the announcement that Musk was buying again. And if you remember when he originally said that he was buying it, the same thing happened. So it brings up all those conspiracy theories, so to say, that the people that run Twitter behind the scenes are actively dumping whatever bots or whatever were on there so Elon won't find them. But it does beg the question, how these people lost thousands and thousands of followers in an instant as soon as that happened. But I'd love to hear what people online are saying, Chris.
Well, it's some good things. I mean, we got some people saying reverse psychology. One person said that people act like the guy is some financial god, and I don't think he's a financial god. I think he's a good business owner, and I think he's got good foresight, and he's definitely persistent and consistent in his actions. I don't think he's a financial god by any means. It's not even his realm, his space. Reverse psychology probably wants to end the policing to make it grow. I kind of like that. I mean, how many of you would like Facebook more if it wasn't so communist is maybe a word I'd use. I don't know. Stephen, what would you call Facebook these days? I hate it these days.
Yeah, I mean, all the social media platforms, they have a hard job. I mean, it's you don't want people on there saying they're going to murder people and straight up true Nazis and things like that on the platform. But how do you draw the line between that and what is free speech? And I think that is kind of the driving question, like the question on top of the pedestal these days is, how do you define that? How do you regulate this stuff? How do you allow people to have free speech while still not making it just a complete dumpster fire that it seems to already be at times? And so they got a tough job. I mean, it's not an easy one. I did listen to Zuckerberg when he was on Joe Rogan, I don't know, about a month or two ago. It was an interesting conversation. And, Zuckerberg stuck in it. He talked about like when the Hunter Biden story came out with the laptop and all that, and how just before that, the FBI reached out to him directly and said, hey, there's going to be a bunch of misinformation coming out. You need to really get rid of it. And Zuckerberg, admitted to saying, hey, we have ways of just suppressing information where nobody can see it. And that's what we did with those stories, essentially because the FBI told us to. So it gets a little bit more messy when you start having, government agencies coming in and kind of directing the social media companies, because that's not the way it's supposed to happen. So I think that's something that needs to stop. And so I think Elon coming in and buying Twitter at the end of the day will be a good thing for free speech, for freedom of information, for what Twitter is used for, which is the public square and having all views, all opinions allowed on the platform. And so I think Elon will be a huge positive for the platform moving forward.
It's interesting. We've never had a social media site that was owned by somebody with the power and the money, for that being said, as Elon does. I mean, you might say Zuckerberg does, but he didn't until he grew it and rose it up. And one other thing too, I mean, I don't want anyone to forget. Do you remember, I don't remember how many years ago it was, 5 years or whatever. I mean, we've been in like a time warp with COVID, but there was a time where the government brought Zuckerberg on stand and they grilled him. I felt like it was for weeks. And I got to believe that there was some backroom stuff that went on there where they said, listen, Mark, we can either destroy you, put you in jail, make sure that your life is hell the rest of your life, or you can just do what we tell you to do when we tell you to do it, and you'll be a wealthy man. Which one's it going to be, Mark? I mean, folks, think about that. If you had a family, he's married, right? He's got a family. Like, what would you do? I got to believe that conversation happened. And all things being equal, I fear that there's going to be a day for me that I get sat in that back room. I mean, with what we're creating with Private Money Club, I mean, listen, there's not a day that we're doing this that I don't think that, we're going to create something that's going to disrupt the world of finance, the banking industry for sure. Am I going to be sat down in one of those back offices and told to comply? And then I got to really think long and hard. What's my answer going to be? And I can't give you that answer right now, folks. I don't know. But Mark certainly had to make that decision. And will Elon have to make that decision? And is Elon going to care? That's the thing. I mean, he'll just blast off and go to Mars and live his life out in Mars.
Right. Is Elon, I mean, nobody knows Elon. I see a lot of good comments coming in. It's because he's Elon Musk. He does whatever he feels like. He's bringing back banned folks. I think he's still fighting for freedom of speech, media silence regarding that. And absolutely right. Like, maybe, I mean, do we know that for fact though, that he's doing those things? Like, I don't think he's really come out publicly and talked about it. And, to me, Elon Musk seems like a guy that, again, I don't know him. I don't know if this is true by any means, but from his actions, it seems like he really does not give a shit about money. It seems like his driving force is not money. It's what he does. He truly wants to get to Mars. He truly wants to create and help the world through Tesla and electric vehicles. And Elon's not one of those guys that's, hey, it's all electric or nothing. We got to end gas. He's the opposite. I mean, he came out recently in the last month or so saying what you guys are doing, driving fossil fuels and petroleum out of the picture is insane. It's going to kill the world. And so, I think he truly has good motivation behind him. But let's hope, who knows, but let's hope that that's the case. And let's hope that's why he is coming in to buy Twitter, because it's not financial. That's not what Twitter's worth. He's going to lose a lot of money in this deal. So let's hope that he's doing it for other reasons, or maybe it's a long play and we can debate that too. But
just a couple more things I want to hit on TikTok. Some great comments coming in. He probably wants to end the policing to make it grow because money means nothing to him. Plus it launches him more into the limelight. He does like the limelight. Sure. Dollar collapse is coming. I mean, there's just a lot of good things. Sorry, I'm not going to be able to read them all. The guy Feds did. Okay. Yeah. So Colorado conservative, he's on here a lot. And what's up, man? He's always got some really good stuff. He said the Fed did that to Bill Clinton, I believe. Is that? Yeah. Bill Gates. Sorry. Bill Gates back in the day as well. Now look at Gates. Look at him go. You're probably right. I think there's a lot more to the things that we see. I don't think we understand what's really going on behind the scenes, and hopefully none of us ever will have to understand that because it's probably not fun. I'd have to believe as well, Colorado conservative, that Bill Gates and, if Steve Jobs was still alive, I'm sure they would have grilled him, and maybe they did. I mean, all these different people that we look at as these iconic billionaires, I'm sure they've had those backroom discussions, especially if they own something that has the ability to change people's views or give people a voice for that matter. I forget about changing views. It's really just about giving people a constitutional right called freedom of speech. Doesn't seem like we really have that anymore. We might still think we do, but it just doesn't seem like it on social media. We can't say what we want and be free. So it's an interesting time. It really is. And you know what else is pretty interesting, Stephen? I think we should talk about it. One of the greatest minds, bar none, in the financial world and the Wall Street world is Ray Dalio. Now, just the other day, Ray Dalio said he's stepping down from Bridgewater. That's a monumental thing. So Bridgewater, and correct me if I'm wrong, I believe they manage about $150 billion Okay, they're the largest hedge fund in the world. They manage money for China and for the U.S., and so you can get the scale. Ray Dalio has been a very active voice on everything from YouTube's to podcasts. He's even been on really small podcasts, which is strange to me that he wanted to do that. But he's got something to say, and this is one of those things where Ray Dalio, everything I've ever read about him, he's never been really driven by money. It seems interesting because he's been trying to say what he wants to say, but because he's associated with Bridgewater, I feel like he's kind of had to be careful how he said it. If you listen to his videos, if you read his books, they're very high level, okay? And you can tell there's just one level deep that he's trying to get out, but he can't do it. I'm curious to see, like, now that he's actually like pulling away from Bridgewater, which gives him that connection to Wall Street. Now he's going to be an independent. I wonder if we hear that second layer from him on what he really thinks. And just so you all know, Ray Dalio understands things in a way that none of you ever could because of his data. And that's what Bridgewater is. It's a data company, really. They have research and data going back to further than any of you could even go back and research on recessions and depressions and what happens and all the stats. And there's this book, The Big Debt Crisis. It's a monster, but if you just read it, and I haven't gotten through the whole thing, but I'm about 3/4 of the way through, it really outlines every recessionary and depressionary period in history. Okay. And it shows the measurements, the KPIs, the numbers that happened before the recession or depression, during it, and then after it. And then he basically parallels that to the US of where we're at today. And folks, I'm not going to tell you, I'm not going to give away the whole book, but it'll scare the shit out of you. Just like The Creature from Jekyll Island, if you read that, will scare the shit out of you. But these fears are good. I'm not trying to scare you folks. I'm trying to bring this to light and let you understand that one of the smartest minds in the financial world, I think, of all time, is telling you what you should be doing. So, you can listen to Chris Naugle and Stephen Nagy, but listen, this is who we listen to. This is who we read. We read his white papers. This is the man that I get a lot of my baseline data from. So you can base it on anything you want, but big news right there. Not bad news, good news, I think. But he's getting older, and I think he's got a lot more in him to help. He's done it financially, and I think now is the time where he's going to really do a lot to help the average person. But we'll see. We'll see.
Yeah. Yeah. So, some other news came out. The U.S. national debt has now grown in top $31 trillion for the first time in history.
That's it.
America's borrowing binge has long been viewed as sustainable because of historically low interest rates. But as rates rise, the nation's fiscal woes are getting worse. And this is out of the New York Times. I read an article recently that just the debt servicing on this is going to basically bankrupt everything in the next 20 some years. So I don't know where we go from here with that debt, Chris, or what that looks like. I'm sure you have some opinions on that. And maybe, like you're saying with Ray Dalio, he sees like things like this happening and he realizes he's kind of, has his handcuffs on running Bridgewater and says, well, if I can get out of there, maybe I can really make a difference and start actually helping not only, the company, but maybe the nation. Who knows, man? But this is a problem.
Well, here's where everything went sideways or completely off the rails, I guess is where you'd say it, is when we went to modern monetary economic theory. I don't know where this came from. I really don't. We need to get back to Austrian economics, but that'll probably never happen in our lifetimes. Maybe it will, but I very much doubt it. It would be a hard transition. The biggest thing I think that happened right now is because this whole, I'll almost say the world, but we'll just focus on the United States because it's more microeconomic, in how you look at it. If all we ever do is print money to bail out everything, bailing out pensions, bailing out airlines, okay, bailing out banks, bailing out Wall Street, bailing out hedge funds, bailing out everything, print, 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 print. Oh, we got to, COVID, print, 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 print. Now, granted, I understand they shut the country down. They got to help keep businesses alive, the backbone, but 5.1 trillion, folks, there's more articles than any of you can count saying that was unnecessary, the sheer amount that they printed. But because of modern monetary theory, really, when you look at it, the Fed is not owned by the US, but the Fed controls monetary policy. They can print money. Well, if you really dig into the books, okay, The Creature from Jekyll Island, you'll understand that the Fed a lot of times is behind wars because they fund the wars. It's a profit center for them. And because of that, they just keep printing money and they pass that on to countries as debt, the US being one of the big ones. You just saw it. So my take on this is until I just, no one's going to like this. And I'm typically very optimistic. I just don't see how we could ever get out of this. It's not Republican, Democrat. They're both print, print, print. I don't know what the answer is, to be quite honest. Unfortunately, my thought is that of what Ray Dalio thinks. I think, in 20 years or something like that, the United States will not be the greatest empire in the world anymore. It will be another empire that rises up. And that's not going to be fun, but the makings and the signs are all there that line up with every other period. That's my 2 cents on that. And I love what Lisa Menconi said. I think that's really important. Can you pop that back up here? So Lisa's coming in from YouTube. She said, I've heard, and she's talking about Ray Dalio, I've heard him discuss 3 phases of life. This is in his book, Principles. He said, he's in phase 3, okay? This is where you help others. That's his alignment now. So by him letting go of Bridgewater, his company that he built from scratch, almost lost everything because of it, built that from scratch. Now he's letting go of that so that he can align himself with his ultimate phase 3 goal, and that is to help people. Because you can't help people when you're tied to the beast. Okay, and I think Lisa's absolutely correct there. And
well, let me just show you real fast, just to put this in perspective, what $1 trillion looks like. Okay, so everybody knows a $100 bill. Everybody knows this is a stack of $10,000. So this would be $1 million right here. So not
that's
that
crazy.
much. Right?
That's all $1 million looks like.
It's $1 million. So that's that mansion back in the day and Little House today. So this is $100 million. A little more respectable, Chris.
Now you're talking.
$100 million. Now let's look at $1 billion. That's $1 billion.
Mm-hmm.
All right, we're growing, right? Now let's look at $1 trillion. That one stack right there is the billion.
Wow.
This is $1 trillion. So think of 31 of these, and that's how much the nation now owes in debt.
That's just insane.
Is that crazy? I mean, am I the only one that thinks that's wild?
It is wild, right? But when everything in your life is based on fiat money and printing and printing and printing, and you get so far away from what insurance companies actually believe in, which is Austrian economics. Not every insurance company, but mutually owned insurance companies still follow and believe in Austrian economics for the most part. Like that's to them and to any Austrian economist, like that's just insanity. But so it's not going to get better.
So just change the subject. I just want to ask you this. So I saw this come out. This is the first time stocks and bonds have fallen in tandem for 3 consecutive quarters since 1976.
Yeah, it's bizarre.
For any like the weird world we're living in right now financially, right?
Well, the debt world, the bond world has gotten way out of hand anyway. Bonds aren't what bonds used to be. Treasury bonds, yes, but even treasury bonds are reacting very bizarre. The other day, a few days ago, bonds were going down when the stock market was going down. That just doesn't make sense. And then the other day, the last 2 days, treasury bonds were going up when the stock market was going up. Now, that was because yields fell, so I understand that. But there's some weird stuff going on out there right now, folks. And anytime things are weird, you got to start asking yourself the questions is, do I really want to participate? So anytime anybody says, oh, invest in the indexes, buy IULs, I want to slap your ass. And listen, like I'm a pretty nice guy, but shit, I'll punch your ass. Like you're just not thinking straight. Like I don't know where you think that's a good idea. Like I think what you need to do is get out of your little shell. And I think you need to go talk to some retirees that just lost their retirement savings that they were going to live on, that now they're having the realization that I'm probably not going to be able to, I'm not going to have enough money to make it. Like, why don't you go talk to them and then tell them, oh, well, the answer to your problem is you should just put money in the index and you should buy one of those IULs. Folks, like, it's not a level playing field. What's right for you, and for some of you, if you're young, I'm talking more to TikTok, if you're young, maybe indexes make sense. Maybe dollar cost averaging in when the market's going down, that does make sense. But you can't just sit out there and tell everybody, oh, put your money in an index, because your needs, your goals are different than the next person's needs and goals. Everybody's different, so everybody needs a different strategy. Even when I make suggestions, I'm very, very risk averse. I don't like risk. So a lot of my stuff might be too conservative for some of the people. But like, listen, I'm trying to protect people, not put people in harm's way. I'd rather take the high road than the low road. So when the tide comes up, I'm washed out. But the low road is where the rewards are, right? You get crabs and everything. You get what I'm saying. I will like the high road. I'm 45. I'm not 19, 20, 21. If you're 19, 20, 21, whatever, you got time. Go for it. But the majority of the people that have money in the markets, they don't have time. And those are the people that I like to try to help. And those are the people that my message resonates with. So if you're young, you can hate me all you want. Okay, you can keep doing what you're doing. But just remember, like, you don't live, you're living yourself in a little square box. Get out of the box and see the world for what it really is, not for what you believe that it is.
Yeah, and don't forget, like especially younger traders, we talked about this the last couple of weeks on this show. You know, if you're under like something like 30, 35 years old, you've never even seen a bear market as an adult. So it's easy to get stuck in these traps. I actually have a 2-minute video, Chris. Can I play it real fast? It's the evolution of the last several years of a day trader and what that's looked like. It's Dave Portnoy. So the Barstool Sports guy, I think he's hysterical. But just watch this 2-minute video. It's just, it kind of sums up everything that's been happening here lately. And it's just, it's classic. November 2019.
Good luck to all you traders out there. Let's have a fucking day. Let's run it. 189.47. What did I tell you this was going to do? I told you. Anybody can do this game. This is so much better than gambling. 80.23. That's what I'm talking about. Punch these fuckers in the face. That was some trading, boys. That was some trading. Up quick 30 grand on CBS. That is how you trade. This game is so fucking unlike the Genius. This guy. People have been doing this their whole life. I've been doing it 10 minutes. I'm doing it better than they ever dreamed up. 203. If I can do that, I make $22 million a year. Keep it up. I am rearranging the stock market's face. It's all about minimizing risk. You panic, masters of panic out there. Uh-oh. Happy learned how to putt. Uh-oh. Happy learned how to short some stocks and turn a quick 20K profit in 5 seconds. I'm smarter than the algorithms.
February 2022.
I fucking hate my stockbroker. I hate fucking Stu Feiner. I hate fucking everybody. Don't fucking text me at the opening. Unbelievable. Lulu's down to 186. Do the math. I have nothing to say about Boeing. I can't get on the right side of Boeing. Boeing sucks. Stop touching Boeing. This is the lowest it's been for Davey Day Trade Global. It's a bloodbath. Down $500,000 in the second session. Oh, don't buy fucking, it'll go down. Fuck you, it will. How many top Wall Street firms can't get their computer to work? 3 minutes before this thing clicks open, I'm down $1 million. What the fuck's going on? I've lost my mind. I'm already getting fucked. The whole thing makes no sense. We're living in a matrix. They're shrootbucks. We're dealing with shrootbucks at this point. Do I buy more Boeing? This is too fucking warm, Welker, you fucking piece of shit. I asked for fucking T-shirts.
Dude, that's classic. Anyone can do this game. Dave Ramsey. And you know what's cool about that video? So the only one that didn't see it was Instagram. I'm so sorry I could only hold one. Is throughout like that whole thing from 2020 through 2022, like his shirts were the same, but he started tearing sleeves off and hoods off, and it was good.
That's good though, right?
Oh my gosh, that's so funny. The money he loses in the stock market, he makes back in content. You're absolutely correct, Andrew. So Andrew was saying, you know, his content, because he's such a big name on TikTok, he makes makes just as much in revenue from TikTok and his other channels that he's losing in the stock market. But regardless, it's sentiment. Like what you just saw there was, you know, investor sentiment. Like super excited when everything's going up because you're investing in emotion. You're just following the herd and everything's playing in your side. But then all of a sudden, just like that, everything shifts. You see, he was doing good for years. Like everything was churning for him and making money. And then all of a sudden it's gone. It's gone. Well, that's not just him. That's everybody, folks. You can be up for years and years and think you can do no wrong. And then all of a sudden in a flash, you're wiped out and you're not going to get back. That's the thing. Oh, investing for the long haul. I got people I went to school with that I'd probably like to punch them in the face too. And they were friends in school, but like they just don't get it. You know, they're attorneys or whatever, you know, profession they're in, not the money game. And all they say is, oh, invest for the long haul. It has never lost money. Dude, you're right in the long haul, it's never lost money. But what are you going to do when everything falls apart, your portfolio is down half, you lose your job and you need money? What are you going to do then? What are you going to do? You're just going to go live in a box? Maybe they will. Hey, kudos. I'll bring them food if they do. But you can't say that. And as an advisor, when I was, that's what we were taught to tell people. Oh, invest for the long haul. Oh, stay invested. Like it'll always come back. But you know what? I saw the other side of that. If I wasn't in Wall Street, if I wasn't an advisor, I couldn't have saw the other side of that. I saw people's lives get ripped from them. I saw during the 2008 recession when I was an advisor, I saw portfolios get halved, people lose their jobs, and that was it. Game over. They had to close their 401k. You never come back from that, folks. Never. Your family never comes back from that. Your kids' never come back from that. That's why this is something that people need to take more seriously, because this one that we're going to go through isn't going to be like the others. It's going to be way worse. Way worse. So, I don't know. I think everybody needs to decide what's important. The numbers on the screen, the excitement, the FOMO, the emotions, your family. Can you maintain your lifestyle if you don't have your job? It's a real question to ask right now. Can you maintain your lifestyle if your portfolio is down 50, 60% from where it is today? Question you need to ask yourself. These are very real things. See, on this side of it, like I've been through that. I've lost it all twice. Okay? And I'm not going to do it again. So each of you have to learn your own lessons. We all have to go through hardships. I just sincerely hope that I can just help a couple people not have to go through the hell that I've been through in my life by just showing them just the high path, the high road, because it's a lot easier. It's not sexy. It's not exciting. There's no, big days like what you just saw in that video where Dave is like getting so excited about it. It's just the slow and steady. But we all sleep pretty good at night. We might not have those big ups. We might not have the Lamborghinis in the garage, but you know what? How good is a Lamborghini in the garage when it gets, repoed a year later because everything fell apart? Not very good, is it? So that's a decision you all need to make. Now, for a lot of my TikTok folks, I mean, hey, buy the Lamborghini and give it away, in a year or two and learn your lesson, because obviously most people don't really want to listen, but I think we're getting a lot, because not one person on here. This is interesting. I've been following these feeds. We got Colorado Conservative coming in with hot, awesome comments. I love it. But nobody on here, Stephen, has said anything about crypto. It's been like crickets with crypto. Nobody's talking about crypto anymore. This is where we should be talking about crypto. We should be talking about crypto at 19, and when it goes to 14, and if it goes to 10, that's where the opportunity lies. But nobody wants to talk about it because everybody's already lost it all. This is when the opportunity begins, folks. The opportunity wasn't last year when crypto was raging and everybody was an expert. The opportunity is today. And the opportunity will continue for those ready. But if you just stay invested, if you keep listening to the herds and you keep following the herds, you've heard it your whole life, you're going to follow everybody right off the cliff. And we're going to be sitting on the other side being like, man, I tried telling them that they're going off a cliff. They didn't want to listen. Why? Why subject yourself to that kind of stress, that kind of emotional roller coaster? If you've been through it, it's not fun. Don't go through it again. Stephen, what do you got to say in closing on this?
Yeah, no, that's it. I mean, just a quick update. The Dow's right now at negative 347, 350. So continuing to drop again, down over a point. S&P's down over a point and a half. The NASDAQ's down 2% right now. So just be careful with these traps and don't get stuck into it. And just an update from last week, the 30-year fixed mortgage rate has pulled back just a little bit in the last couple of weeks. So we were up over 7.5. This is the national, or I guess this is the Florida average, but we were over 7.5. So it's pulled back just a little bit. So I think we're going to continue to see that. A lot of people are betting that we'll see mortgage rates over 8% by the end of the year, which I think will directly affect the housing market next year. So maybe we can get into that a little bit at the next What the F, more in the housing market. Outside of that, the only other things we missed, the war in Ukraine and Russia is still raging, and it's getting worse and worse. And the oil situation, the energy situation over there is not good. OPEC is tightening stuff right now, and oil supplies are being cut. So that's going to affect a lot as well. So something to keep an eye on overseas. Facebook has become the 499th out of 500 company in the S&P 500. Last quarter, Facebook announced that they were doing a hiring freeze and ad sales are down. So it could be a downward spiral for Facebook, otherwise known as Meta, until the metaverse either takes off or people are saying maybe Zuckerberg needs to step down now. So we'll see what happens with that. So just some updates on those. Your boy out in California, Mr. Newsom, signed a crazy law that basically makes it illegal for physicians and doctors to give any information to their patients regarding COVID-19 unless it's approved by the state. So pure communism happening in California right now on that front. So just a couple little things that we missed, but some news that are happening in the world. But a lot going on right now. So keep your head up and keep tuning in, and we'll keep bringing you the real news.
Okay, so we got a couple minutes. I'm going to wrap it up with this quick, like rapid fire here. So crypto, a lot of people instantly like, oh, I don't know. How do I invest in crypto? I don't know. But the best thing with any kind of investments, if you're going to invest at all right now, is dollar cost averaging. That is it. If you don't know what dollar cost averaging in, there's this thing that I know it's still new and a lot of people don't know about it, but it's Google. It's Google. And then you just put the .com after it and just type in dollar cost averaging to get yourself a full explanation of probably the best way you can put money into any investment. I don't care if it's indexing, crypto, Bitcoin, Ethereum, whatever. To me, in the crypto space, there's only a couple that even matter. The rest of them, well, you'll see, they'll be gone soon. But you know, every one of you love that Shiba Inu and you love that Dogecoin that was being talked about. How they doing now? Yeah. All right. Then let's get to real estate. This is a real topic, okay? Because crypto, although in the future, it probably will be something big. And I think, you know, for me, I just dollar cost average in, but I'm very bearish on it. Real estate, I'm very bullish on it, but bullish with skepticism is the word. You saw the 30-year fixed rate, and that's going to go higher. Stephen's absolutely correct. We will see 8% 30-year fixed mortgages. But what you don't understand is right now we're at 7. So let's just go to 8 because it's a round number. When rates are at 8%, the average person last year that could have afforded an $800,000 house today at 8% can probably afford, and I'm just guessing, I'm not doing the math, but probably a $300,000 to $400,000 house. Think about that. Think about that. A year or a little over a year ago, they could have afforded an $800,000 house with their income. Today, nothing else has changed except for the rates have come up. Now they can afford a $300,000 to $400,000 house. It's pure mathematics. So with that being said, when people tell me that real estate is going to continue to go up or real estate is going to, you know, keep appreciating, I call your bluff, because the logic, not the emotion, the logic behind that states otherwise, and history proves otherwise. Price will be determined by demand, and demand can only demand what they can afford. Okay, you've never heard that one before because I just came up with that. Demand can only afford what they can afford. So if somebody can only afford a $400,000 house, but all the stock is 6, 7, 800,000, what has to happen? Either houses don't get sold or the price has to come down. Folks, the price of real estate is coming down. You're already seeing it. It's going to come down faster and faster. Real estate, because everybody thinks, oh, it's not happening. It's still high. Houses are still selling. You know who you hear that from? Your realtors. And you know what? Half, if not more than half of the realtors out there, bad news for some of you, you will be out of a job. You will not be a realtor in a year from now. You know why? Because you won't be able to afford to be one. That is a fact. I've read a lot about that. There are so many realtors right now. We don't need that many realtors. I think there are so many realtors that literally, with the housing stock right now, there's one house for every 100 realtors there are. I think it was something like that. Think about that. There's one house to list for every 100 realtors. What do you think is going to happen? They're done. Real estate's going to come down, and it's going to have a dramatic impact on realtors and mortgage brokers and anything that has to do with that industry. But real estate has and always will be a lagging indicator. So when the stock market goes down, real estate doesn't come down with the stock market like crypto is. Crypto is correlated exactly. Real estate's a 6-month lag minimum. So you won't see the impacts on real estate until 6 months after the impact. Okay, so that's why you're not seeing big impacts, but you will. So again, what do you see? Are you going to bury your head in the sand and pretend this isn't happening because it sucks? Or are you going to rise up and see the opportunity right in front of your face? Because this opportunity is the same opportunity as You know, what was his name from Back to the Future? Marty and Doc. Marty and Doc showing up in your driveway in that awesome DeLorean saying, hey, I'm here to take you back to 2009. And you're going to be able to buy anything you want. You'd be a billionaire right now. But guess what? The DeLorean shows up soon. And you're going to be able to buy at a discount again, if and only if you've prepared and gotten ready. So, folks, I hope you all enjoyed the show. You guys had great comments. I appreciate you being on TikTok, Instagram, YouTube, Facebook. I'm glad I was able to be here with you. I'm not going to ask for a prayer, but, you know, put your hands together and like give me a good hurrah, because I've got the biggest talk of my professional career Saturday. It is my TEDx talk, okay, in Farmingdale, New York, where I get to, my TEDx is a letter that I wrote to my daughter. And that letter is about money. It's Rethink Money. So, folks, this is the biggest talk of my life, not because it's a TEDx talk, whatever. I speak on stages all across the country. It's the biggest talk of my life because it's for my daughter. And this talk will outlive me. Long after I'm gone, my daughter will be impacted by this one speech, this one letter. That is a massive weight on my shoulders. And I can't wait for you all to see it. It's unbelievably powerful. There's only a handful of people that have heard the talk. And pretty soon, all of you will be able to, you'll be able to just Google it. So that's all I have to say. And folks, thank you for your support. Stephen, thanks for carrying the torch, you know, while I've been rehearsing, and traveling the world promoting Private Money Club. And also, too, hey, let's give a shout out to Private Money Club. We launch October 14th, something that will revolutionize the way the world of finance works. Stay tuned. And if you guys want in on that, Stephen, in the comments, if you can put chat the text. So if you want to join us for the Private Money Club launch, all you need to do is text PMC. So just grab your phone, text PMC to 33777. 33777 and put PMC in the chat. And I welcome you to join us for this massive launch. So until then, folks, we'll see you next time.